Beautiful. All right. Welcome back, everybody. After a brief hiatus, I don't know if you call a month off brief. Arnie and I did do an interim budget podcast, which didn't actually make it to air because our recordings were a mess. So we decided
all about transparency here.
Yeah, we decided to stop that one and just re-go once we were all back together in one big happy family after Brad had made it back from gallivanting around the world. We just made a nickname up for him. What was it? Bradley San Tabone, based loosely off Carmen San Diego. So, yeah, many pictures and much jealousy from my end, Brad, watching you gallivant around the world. But
tell the tankers where you've been.
Yeah, I've been spent 6 weeks in Patagonia. So from northern Patagonia in Argentina, around Bariloche, the Great Lakes down to the bottom of the earth, closest point to Antarctica called Ushuaia. And then did a bunch of hiking through a place called El Chalten, and then went and saw the glaciers in El Calafate. I might even, I watched a piece of ice about 25, 30 stories high by about 100 meters wide fall. And so I might even try and sneak that into a random place in this podcast because everyone can just see things crashing. You know,
post it to the Facebook page. Yeah, because those glacier photos were sick.
Yeah,
great photos. Great
out
photos.
Out of this world, boys. Yeah. So, we're going to be playing a bit of what is it? Tabone, Carmen, San Diego, whatever it is this year. I think we've got Borneo. We've got a bit of Europe on the cards. We've got a bit of Asia. So,
San Tabone.
But back in Australia now for at least a couple of months. So
good to have you, mate, and good to be back, everybody. So episode 30, we're up to Money in the Tank. Joel Seach, Principal Advisor.
Arnie, Tax Professional.
Brad, Generalist.
Robust traveller.
Robust traveller.
Blogger.
Indeed. I think the important thing is that we're committing that we are going to be posting weekly. I think is the.
Brad's got us on record.
Weekly. On record.
We're going to be here for you.
It's all about accountability.
We're going to record every Thursday, and it'll be out shortly thereafter. So. For the tankers that have been missing us, we miss you too, and we're back. So
we're back
with a vengeance,
especially in these times of need.
Yeah,
absolutely.
It's gone bonkers. So we are going to discuss inflation, interest rates rising today, and a few other things. But first segment, Rifkin's rules. Yes, nice, Jolie.
We're up below the convertibles here. All righty. Let's have a look here. There is no such thing as a get-rich-quick scheme. When it does happen, it is pure luck. Don't forget that.
No such thing.
Agree more.
Yeah.
Clearly, Rifkin's never heard of crypto.
Or he has.
There he has. And, I do like to refer it back to a baseball analogy. You can try and hit the home runs, but there's a lot of chances of striking out, or you can go for your second bases and your third bases and your single bases, and that will get you there, but just takes a little bit longer.
Indeed.
It's like that bit in Moneyball where he's like, keeps throwing back to Jonah Hill's character. It's like, what does he do? And he's like, he gets on base.
Gets on base.
He gets on base.
And look, all these crypto jokes, I would like to point out that our dear FANG stocks are not looking so great either. I'd say growth tech stocks are actually probably faring worse than crypto over the last 12 months. So
let's have a look. Just quickly, like Facebook stock. What's
Meta? Thank you.
Meta all-time highs. What's it down from, Brad?
I think Meta is down. I think
50%.
Yeah,
50% from all-time highs.
50%. Yeah, Netflix down.
That's down like 73% or something.
More,
like
I think.
Yeah, check it out.
Yeah, I mean these. I think it's 80. So it was 6 days ago. It was 70%. It's actually 74% now.
Amazon down 41% from its all-time high.
So I mean, the markets as a whole, I think, are in a bit of trouble. So Rifkin, is correct, and I think the clearest thing for me was I've been saying to a lot of people in the crypto space for about 6 or 12 months around the API why that people are getting. In some of these kind of, staking pools and loan pools and the rest of it. I mean, anyone that was a part of Luna the past 3 days, I mean, I know someone, through someone pretty close that kind of saw a $60 million portfolio turn into about a $1 million portfolio over 3 days.
Wow.
I mean, any time that you started hearing 20%, return on your staked USDT, and, they always said that it was trying to, attempt to kind of buy growth, like a growth hack initially. And obviously the APY was going to come down over time. But I mean, it just shows the risks out there, right? Sometimes things are too good. I mean, if you're getting paid out a rate higher than what it is to borrow, generally there's something amiss. If it sounds so good, it is too good.
The first segment, we're going to cover off a few different segments, and Brad's touched on the first one. So while we're on it, I reckon we dig into a little bit, even at a high level for the listeners, in terms of, broadly speaking, your Bitcoin fall and your Ethereum fall, which are the two main hitters out there. What do you think, Brad, sort of led to the fall off, and where's your thought pattern around it?
I mean, again, I've been personally kind of liquidating crypto over the course of the last 3-4 months as the NASDAQ kind of has been falling, because the two are
at the moment
some
correlation at the moment.
There is direct correlation, right? So I think when 87%, I've said this a couple of times, 87% of all crypto buying over the last 18 months has been institutional. So there is no doubt that there is it's a correlated asset at the moment, and you saw it every single time the NASDAQ sneezed, or the market sneezed, crypto inadvertently kind of fell with it. I do still believe that in the kind of short to medium term, I think we are going to see that correlation break. I think once markets like growth tech markets and the rest of it find a bottom and find their multiple base again, I think you'll see the recovery in the crypto space. That's just my personal opinion. With inflation and the rest of it, do your general advice, general nature. But I mean, in terms of crypto, I kind of liquidated a large amount about a week and a half ago. I was in the car driving down the Pacific Coast Highway in LA, staying at a mate's place in Malibu, and he was asking me, should he get in, and the rest of it. I was like giving him my opinion, and I went, wait a second, if I'm giving you this opinion, what am I still doing like that much in it, right? And so, I got an SMS off him yesterday saying, have you seen the markets this week? So glad you acted on that. So I think that while what kicked off this round was two things. One was obviously the markets still. I mean, the inflation number came in slightly higher. I know we're going to touch on that. Higher than the kind of 8.1 that they expected. Some good news in that, but inadvertently it's still higher than what they expected. So there's probably going to be some continued rate rises. That's one part of it, but I think the biggest part of it is what's happening with Luna. I mean, it was the two Luna, so Terra and Luna. One was a stable coin, and one is the kind of smart contract platform off the side of that. And Anchor is the mechanism in which kind of the creation of this stable coin, which was supposed to be pegged 1-to-1 with the US dollar. It's an algorithmic stable coin. So it's not necessarily like every single time they mint one, they go get $1 and they hold it in reserves. They can use a mixy bag of different capital assets, and they're using Bitcoin, Avalanche, Ethereum to kind of back the stable coin along with fiat. And the idea behind that was that if anyone attacked it, like they did on this, in terms of make a bank run on the stable coin, and kicked off the burning, which is the deletion of Luna, that it would bring down the whole crypto market, because they would have to sell Bitcoin, and then therefore you couldn't be one crypto versus one crypto. I mean, there's hints around that it's BlackRock and Citadel. I mean, they'll come out in the next couple of weeks, but they've done a run on it. So they've basically been exiting billions and billions and billions and billions of dollars worth of USDT, which is that stablecoin, and that's inadvertently caused the Luna Foundation to sell, I think, over now $3 billion worth of Bitcoin, along with Avalanche, along with Ethereum. And so it's just dumping. It's like margin calls. They're getting the call to just dump it. And so what that does is create a bit of a death spiral, right? In terms of to keep the price and the peg up, they've got to be selling assets to liquidate. And that's just dumped onto the markets. And it's created kind of one of those black swan events in crypto where who knows where the next bottom is going to be. I mean, it's like the Bitfinex, there was Mt. Gox back in 2015 or 16, where a lot of money, these sort of things generally shake the market, remove all the leverage from it. So, I mean, we're down at the moment, I mean, we're down to 27,300 US.
I was about to say, Brad, I was like, just quickly, sorry to cut you off, but saying, yeah, we're under 30. I'm looking at it now, it says USD 27,685. As I understand it, that Michael Saylor bloke, and I forget the company he owns, but
MicroStrategy.
Yep. MicroStrategy, they're the ones who are very heavily invested in Bitcoin.
Oh, yeah.
I think their margin call, their liquidation will start if Bitcoin hits around this price, like 27, 26. And then he had a tweet saying that if it gets to 21, that's it, like they're cooked. So if the pressure stays on Bitcoin, more liquidations are going to be forced. Yeah.
I mean, you've also got like ETFs. You've got a whole bunch of stuff out there that, not spot price ETFs, but you've got, ETFs out there like Grayscale and the rest of it. So look, at the moment, it's getting tested, I would say. I mean, there's never been an algorithmic stablecoin that has survived. Luna was looking like it was the first one. It's the first one to get to about 18 billion in market cap. Do Kwon did a very good job in marketing it and the rest of it. I mean, it rebounded it back up to about 80 cents per dollar. So it's getting close to the repeg, but it's dropped back down to 66 cents on their on Terra USD. Bitcoin's, Bitcoin's down, 12% today. Ethereum's down 20% today. XRP's down 30%. Cardano's down 30%. Solana's down 35%. Polkadot's down 30%. Avalanche's down 35%. And so, look, the clear thing is, I've said with people with capital on the side, if your risk tolerance is there and you want to start DCAing in. I personally think, like with the markets and the inflation, until inflation starts we get multiple data points that inflation is, I think, starting to get handled by interest rates, and we're starting to see the impact flow through. And the leverage gets taken out and the market's find a bottom in this. I mean, it could fall. We've seen this happen like 7 times in the crypto space where, it goes up to 100, down to $4, goes up to 1,500, down to 300, up to 3,000, down to 400, up to 20, down to 4,000, up to 68, and we're down to 27. So, look, it's a high-risk investment. If you've got a medium to long-term around it and you just want to sit there, fair enough, but it could still fall.
Question, and then question for both of you boys off the back of this question. Brad, what's the likelihood that Luna and Terra resolve their issues?
The crazy thing about crypto is that it all happens in front of everybody. So people get to watch these things unfold. It's not like,
it's not opaque, right?
It's not opaque like, what's his name in Singapore that recently,
Tiger Global Huang.
Well, yeah, Huang. The ex-Tiger Global guy.
Yeah.
Even Tiger Global right now is in some trouble. And so it's transparent. It's front of mind. I don't see now that, as of this morning when we got back up to 80 cents, I thought maybe the repeg will occur because this has happened before with Luna. It depends on whether or not they can bring in institutional finance basically into it and bring in enough money to fight off the people that are actually on the other side doing this. I don't see. So they may repeg Terra and then they have to rejig the community to try and get Luna back up. But Luna itself is pretty much gone.
Well, then the backup, the second question to you and Jolie off the back of that, and we've just lost Jolie's video, so hopefully he can still hear us. But the second question was, what do you think about, this is general in nature, everyone, not financial advice, but what do you think about $100 pump into Luna? If it's at 30 cents or whatever it is now, and they can recapture all-time highs ever, like as a chance, that they could recapture like $113. You don't think $100?
As I said to a friend last night who ached in about 20,000 US at $2.70, no. And I had another friend that was going to ape in about 50K US into the stable coin, and this morning he was swearing at himself because it got back up to 80 cents. but it's dropped back down to 60, whatever. I just would never put $100 on it. It's even worse than Shiba. It's even worse than Shiba.
I was about to say
the
Sultan of Shiba. My crypto senses are tingling. I might have to put $100 into Luna just to see what happens.
Do it for the pod. Do it for the podcast.
Oh,
I'll do it. As soon as this podcast ends, I will buy $100 worth of Luna if I can get it on.
I mean, Luna was like honestly one of the most robust communities with community support. It had grown like in terms of its funding, its organization. Obviously Terra linked to it and the way that they're burning strategy and algorithmic trading. I mean, it was set up, but like Rob Paul says, this is the market. The market will test everything. If the market can find a weakness somewhere, it's going to find it, test it, and everything might work beautifully in when it's rainbows and sunshine. But as soon as someone finds, like Soros on the Bank of England and the rest of it, right? As soon as someone smells a little bit, and the next bit will be, Arnie, like you said, with MicroStrategy and the rest of it. There'll be people out there going, well, if that's the number, then let's chase it and see what we can do. The thing with Bitcoin, though, is that, I mean, even with Terra Foundation dumping 3 to 4 billion in a couple of days, the price only dropped from about 32, 33 down to about 29, 30. So there is that.
I'm currently trying to log into my Binance just to double check that I can actually buy this Luna. And if I can, I'm doing it for sure.
But look, I wouldn't. If people are still sitting there today, right, and you didn't get out back at like 39.40 at Bitcoin, and you're sitting at 27. I mean, do general advice on the rest of it, but not sure what the downside is at this point.
Yeah.
Well, never look at something going down 90% and don't believe that it can go down another 90%. Is all I ever say to people.
I know it's
smart.
It's an old kind of testament, an old saying, and it's boring, but it just heeds the advice of diversification being such an important part of anyone's situation, because you hear about that. Was it Sailor? The company and the leverage position they've got themselves into with leveraged into crypto. You're putting your company on the line and your livelihood on the line, and essentially.
That's the thing, Joel. I know people have done it personally, right? That have got one foot in retirement and put 90% of their wealth into crypto.
Yeah,
and it's any asset. If you put 90% of your wealth into growth tech stocks, right, it still wouldn't have. Diversification is. Yeah, I mean, I've been lucky enough that I've had some kind of resource like oil and gas stocks over the last couple of months completely actually make more than what I was losing in my growth tech stocks and in my crypto portfolio. So
diversification and
I'm just a disclaimer. I'm just memeing. Like I probably will buy $100 worth of Luna for the pod, but I've lost money on my SHIB when I should have sold out when it hit its all-time high. So yeah, it's like you got to be careful of these things. And taking profit is a skill. And we all get greedy, and diversification and hedging, it's important when you're managing your money.
Yeah, I mean, again, Arnie, on that one, an example was that one of the oil and gas stocks, at the point that I sold about 30% of it at 7x, right? And I took it, and everyone was like, a couple of other people that are involved in it. About 2 weeks later, it was at 11 or 12x, and everyone was like, "Oh, you idiot!" Right? And it's dropped back down to about 5x. And so it took me 35 years to realize that taking money out as it goes up is a wise thing, and then diversifying that. Right?
You've been trading stocks since the womb, mate.
Since he came out trading.
Since the womb came out trading
with his eToro app.
So we'll go to Jolly in a minute and we'll talk about inflation, interest rates. But just quickly, just to cap off what's happened to FANG, because I had a look while you guys were talking about crypto. Apple down 15% from its all-time high, so it's still holding up well. And that's one that I'm looking at as a potential, like that dominant has to fall eventually. And Google down 23.6%, so still holding up pretty well. Anyway, Joy, is there anything else you want to say about crypto markets? That was a pretty detailed explanation of what's going on from Braddles about what's happening.
Yeah, I mean, I just think watch your space. And again, as part of any kind of diversified strategy, I mean, look at kind of the deflationary side of the asset and what its possibilities are over the kind of short, medium, long term.
So bet the farm on Luna. No, just kidding.
You can't go broke making a profit.
Yeah, it's true.
When when things are starting to, have a bit of upside, you're never going to pick the top. Maybe 1 out of 100 times you'll pick the top. So, if you do feel like you're at a point where you'd like to diversify and take some profit, do so with confidence and don't look back and move on. Move on to the next thing, and don't leave yourself too high and dry in terms of if things do take a hit or a tumble, that you're not forced into a crystallization of a loss unnecessarily. Really, really important, and having enough kind of defensive cash or whatever it may be to sort of ensure that you're not leaving yourself in a vulnerable position in that regard, because markets do fall, investments, assets, whatever it may be, will have, it has its time in the sun, has its periods of volatility. And when you talk investing, you're talking, for a long-term time horizon. So they're just some, some tidbits there to add to that.
Yeah, spot on, Jolly. And so inflation and interest rates, how do you want to tackle this beast?
Yeah, I guess just from domestic in Australia, we had the RBA meets the first Tuesday of May, and we had the rate rise. It was 25 basis points, wasn't it, from 10 basis points up to 35. So
just quickly, I saw a very funny article about that. People saying that, the Australia's gone too hard or too fast or something like that, because it rose 25. Like when people were expecting it just to be 0.15 to get it to.
Whereas I'm on the other side of the fence, as you guys know how bullish I am on interest rates over the last 12 months. I saw a 25. Told Jolie I made a quick couple of hundred on the bet markets, but it needs to be faster than that.
They'll go again after the election. So we've got the federal election obviously coming up as well, and the RBA is renowned as a very conservative, conservative department, and they want to be seen as independent. So that's hence the reason they were happy to pull the trigger on the rate rise prior to the election. And
I didn't think it would happen.
I did, but I was hoping it was going to, because I hoped that it was independent. I think what you just said there, Joel, is a key point. I think they're showing that they are independent, which is what they should be.
Did you think they would do it, Jolie? Do you think they'd do it before?
I'm trying to think back to my understanding. As it got closer, you could see kind of the rest of the world inflation really starting to ramp up and the pressure was starting to build. So I think I actually felt like they probably would. And then they'll go again next month, and they'll probably go again the month after. And whether we have a 50 basis pointer thrown in there, possibly too, and it'll eventually kind of, they'll probably want to see out the year at least 1.5% to maybe 2% towards the end of the year. And it's funny, I guess, for the listeners out there, the RBA, Reserve Bank of Australia, is considered and should be an independent department and not linked up with politics, but they aren't usually known to raise a rate prior to election, because they don't want to sort of, sway an election, because sometimes politicians, you'll see the market saying, the last, 10 years we've been in power, the interest rates have been X amount, and under the other party, they're at X amount. Well, it's got nothing to do with, politics. It's the RBA making an independent decision on the actual economy. So
it's a lag decision, right? So decisions made create an inflationary pressure in job markets, and then they make decisions afterwards. It's got nothing to do.
So for the listeners out there, don't listen to the rhetoric of politicians. And
I've seen heaps of that though. Like in this election cycle, I've seen so many comparisons about like using economic data, and it's like, especially tax data, and it's like the tax rates have changed completely from the last Labor government to the current Liberal government. So it's like, anyway.
So I guess in terms of that, so we've got the federal election coming up, the state in Victoria where we are later in the year, but interest rates needed to go up. They call it tightening of monetary policy. So it's tightening up the monetary policy. So they're increasing the interest rate and the cost of borrowing money. So that then impacts borrowers. So at the tail end of that, you've got your people that, are borrowing money to, whether it's to invest or whether it's to own a home or whatnot, or businesses. Those cost pressures will get passed on to those areas or companies that are leveraged. As we just spoke about with tech stocks before, that's one of the reasons they've been hit. So that then hopefully that what they want to see happen with the tightening of monetary policy, and when it's going the other way, it's easing of monetary, but they want to see that tighten up consumers' belts and companies' belts, which will then help flow into the market of inflation and the cost of goods and those things that are rising too rapidly. They don't want to see inflation rising as rapidly as it's been rising. I think it maybe hit about a 3.7 the last check, which will Yeah, last checked a quick 3.7, which will go up again. It was up from 2.5 in December.
3. I think America
in the States,
8.3.
yeah.
And just remember to everybody, this is the first month that we're now comparing against kind of inflationary data. So when we used to compare it against kind of the previous month, 12 months ago in the US at least, we're comparing it against a pretty flat environment. We're now comparing it against where kind of inflation started kicking up. Australia's probably another, I think about 6 months behind.
Yeah, and as a as a side as well, with inflation, the Reserve Bank's target range long term is 2 to 3. So what you don't want to see is what's happening in other parts of the world, and what will probably end up happening here with our next interest rate inflation assessment is you don't want to see cost of goods ramp up really quickly, which we're already seeing. I think, Blind Freddie can see it, the cost of goods, input prices, the labour costs,
petrol,
everywhere, petrol,
wages, electricity.
The one interesting point of note for the tankers is normally when inflation runs rampant, it's because an economy is doing well and it's running hot.
Correct.
In this case, it's the opposite. It's the economy is suffering because of all of these
logistical problems.
Exactly. So essentially,
it's hard.
Yeah,
it's hard to balance.
It is very hard, and like places like America are staring down the barrel of a recession and potentially stagflation. Hopefully, we're a bit more insulated than that. I think we would be because of
resources help a little bit as well with us and
with our two-tier economy, 100%.
Yeah.
And the US, the US is in a predicament, Arnie. Like you just said, it's runaway. You would say there is runaway inflation at the moment, and you've also got on the other hand kind of a recessionary environment where if they bring down inflation by continuing to raise rates, then they're going to be stopping the kickoff to the economy that they were hoping for, which is already showing signs of spluttering, right? So with consumer confidence and the rest of it. So
they're really kind of key. The governments are really key on wanting the economy to recover, and it has been recovering. Speaking, I guess, domestically in Australia, it's recovering, but it's getting to a point where it's recovering off a really low base or a lowish base and really low interest rates. So that magnifies the recovery and it speeds things up too quickly, which then causes inflation and all these input costs and the lack of, I think I mentioned it before, the lack of migration, immigration, so the lack of staffing and employees, and that then pushes wages growth up, which then feeds through to the end consumer. So all those things that they don't want to see that occur, and it's not good for anyone when inflation, it's a bit like salt. A little bit's good. It's nice to have. Or
I'm going to steal that one, Jolly. It's like
salt in the back pocket. That's good.
A glass of red wine a night, or a little, bit of red wine. It's good, but too much, it's not good. No good.
And I think the key things to think as well here, just to kind of give the information to the tankers, is that, like Joel's obviously talking about the resource, lack of resources for labour in the markets, right? We've got that, obviously. Arnie talked on the supply side of things, and we've talked about Russia and Ukraine and kind of, whether it's the energy markets or whether it's, for instance, the food market. So the food impacts on inflation, we've seen this from last season. We haven't actually seen this current farming season play out across the world. And so I think when people are looking at, I think you had Intel and Samsung just come out, and TSMC again come out with chips probably not going to recover until 2024, 2025 now, with all the helium issues and the rest of it.
Same as autos.
Because you've got Ukraine obviously is a massive wire harness thing, so VW and the rest of it kind of shut down stuff. I think we're in a kind of an interesting place at the moment worldwide. I think Australia is a great kind of, if you could be in a place at the moment, I think Australia is a great place. I mean, I've just recently been in Argentina where the average inflation rate's around 70%.
Bloody hell.
And they're hitting 8% in a month. And I mean, you speak to people there, and they've been living in this inflationary environment for a while. And
I haven't been to Argentina, Brad, but tell us, like, going into a shop there, are they using, like, they having to update their prices daily, like with whiteboards?
Weekly or monthly. So what ends up happening is, so the Argentinians that I speak to, they've all said that they now cannot plan in their life, and they haven't for about a decade, more so for the last 5 years. They live basically day to day. So you get paid you buy everything that day because your wage is, you don't know what's tomorrow. So an idea, a bottle of wine that Juan and Aisha went out for the night before, I went in the next day and ordered the same bottle of wine, and it was 22% more.
Yeah, yeah.
Right?
And you haven't seen anything like that in Australia, and that's a perfect example, an extreme example of why inflation.
It's extreme, but I mean, you've got Turkey.
Not good. Why inflation's not good. So
yeah, I mean, you've got Turkey running at what they were a G7 country, right? And they're running it. I think they did 70% last month. And so no, inflation, runaway inflation, not good. Not good.
I think it's not good.
A little bit of salt. Ruin your meal. But as you mentioned, Jolie, I think being in Australia and being kind of the economy that we have, and that we're not necessarily. I know we are interconnected into the worldwide economy and the rest of it, but I think we're pretty lucky where we are at the moment, coming off a pretty stable economy.
Well, like, put it this way: worst come to worst, we've basically got certainty of supply here of all of the things we need for our own country. So if we need to be self-sufficient, we can. Yeah, prices will go up, but we're going to be okay.
I think the main thing I reckon the government wants to see happen, and I reckon both parties would want this to occur, the big major parties, is that migration to pick up, that tourist, that visa holder. They want that opens up a lot, and that really
there's temporary workers for labour.
Temporary workers for labour, massive, because that flows onto all the different businesses. So I think they're both desperate for that to occur.
Just touching on that inflation thing, I know. Like, we're probably in like the darkest days at the moment, and it's like as Brad said, we're going to have flow-on effects for the next couple of years. But the good news, like the optimistic side of me, says that like this issue will resolve eventually. It's not like it's going to be forever.
Yep.
Once the supply side comes back and takes away all that extra demand, we're going to see these issues ease. It's just a matter of how we get there. So. Yeah, I think people are working on it. Obviously, like every day.
When it's in times like this, and in times when you see the markets taking really big hits, it does feel a lot of doom and gloom, and the headlines will reiterate that, and they don't help that. But it doesn't get
Have a look at property over the last month, Joel. I mean, almost laughing. I mean, I sent around occasionally the old article to some people, and for even when I was hollering at interest rates of property only about 6-8 weeks ago, there wasn't a negative article around. In the last 4 days ago, there was this article, I think it said the reckoning is here. And I was
they love the headline grabbers. And that's, for the listeners out there, take the finance journalists and the ones you see on Facebook with a grain of salt. If that's any advice I can give,
I wouldn't even give them a grain of salt.
Nothing. So it's like if you listen to them throughout your life, you'd end up doing nothing and creating no wealth for yourself or no long-term investment, because they're just constantly trying to grab headlines off anything, and it's lazy journalism. It's super lazy. They're not coming in with any kind of fact. At some stage, they'll be right to an extent, and that'll kind of, give
box right twice a day.
I mean, just an example from my own life, boys. I'm going to be feeling the pain the next 12, 24 months, because we did not lock in our mortgage interest rate because we want to sell. And so we've kept it variable. And I know I'm going to eat those price rises in the mortgage payments, the interest rate rises, but we still think we want to sell sometime within the next 12 to 24 months. So it's one of those things where I'm kicking myself that I can't lock in. I wish I could lock in for 5 years, but at the same time, not now. I wish I could have done it like last year. But because we knew it was on the horizon, I thought, I got to roll the dice here. Exactly what Joey said. Like, I might eat some short-term pain.
You just got to roll the dice sometimes, right?
And outside of money, like moving homes is one of those things where you want to find the right place for you. It's like, obviously money's a factor in it, but it's more about the tangible benefit of having a home you love. Does that make sense?
Yeah, it's a lifestyle asset, your home.
Yeah, a lifestyle, yeah.
It's a it can be a good investment asset too, but you don't do it for the paramount reason of making it an investable asset. It's your principal place of residence. It's a lifestyle, and hindsight's 20/20 vision when it comes to interest rates. And a lot of people with their home loans, they've just kept their repayments as they are anyway, or they've built up their offset accounts or redraw accounts. So what the interest rates were 2-3 years ago, they've just kept the same repayments going, and won't even really notice the pinch of a rate rise. So it's I
think it's only really those new home buyers in, right? And I've been saying this to everybody that, like, if you've got your home and you want to be there for a while, like, nah, just only can fund rate rises. But I think it's just, I do know a few people that have recently in the last 12 months, purchased into something, Joel, and they've probably, pushed their LVR to the max. And, if interest rates get up to 5-6%, then they're in a little bit of trouble. Because I think everyone's just got to seek your own financial advice. And
general in nature. And, when they do serviceability tests, they put in a good 10 basis point buffer, I think it is. So you've got some cushion in there of what they feel, because the interest rate we've been experiencing, like you go to a lender, you're getting 2%. That's not normal.
It's not normal at all.
Yeah. Joey, if someone's LVR gets pushed over 80, do you then have to start paying lender's mortgage insurance? Even if you're already in the
no, because they don't. I don't believe the banks do a revaluation on the home. So it's only upon going into a home or an investment property they'll assess the LVR and do a valuation. It's quite unusual that a bank will go back and call on a.
I think that's the difference between Australia and the US, because I think the US, obviously during the GFC, were doing just that, but I don't think Australia does.
People were handing back their keys in the GFC, and there was no recourse. It was just like the bank had to take the loan back and take the asset that had decreased. There might be some kind of cases in mining towns potentially where they might have done it in Australia, but it's not off the top of my head a normal thing. Difference to a margin call when you're borrowing, in stocks, you can get called on that, but homes generally, very rarely. It's usually on the way in is when you get assessed on serviceability, and you get assessed on the LVR at that time, and you get a valuation on the property.
Thanks, mate.
I'm cognizant of time. We've got about 10 minutes to go. So hopefully that covers off a little bit about the interest rates and the election and the inflation. So keep an eye on
what's going to happen over the next, Joel, you said what's probably going to happen over the next kind of 6 to 9 months. So we'll be there for the journey with you. And we'll get through the periods of challenging times, and then things turn around, and you sometimes actually forget challenging times as well. It's quite interesting, It is.
How the mind works and the psyche works. But Arnie, I know you wanted to touch on a listener question, a Q&A regarding Russia and Ukraine, or Russia more specifically, around the segregation of them from the global economy. So did you want to maybe read out the question and just put a few snippets out there around that?
Yeah, mate. Yeah, I will. Thank you. So, sorry, Bo. This is Bo's question, and he asked us a while ago, and you and I tried to address it in our pod that never made it to air. So we'll do it again with the benefit of Brad. So Bo asked, and this is old news, I guess, in one sense, like Russia being banned from SWIFT, which is the international payments system, will this cause a bifurcation in global economies? So, simple terms, it will, and it is already doing so. And I know
that means segregation of themselves as an economy from the world.
So bifurcation is in splitting. So there'll be a Western economy, Western world, like NATO countries, and then there'll be people who are willing to deal with Russia. So some examples that are actually occurring is like China is dealing with Russia, India is dealing with Russia, but there is still some pros and cons for the different parties to either side of that agreement. Like, for example, India is picking up a lot of cheap hydrocarbons from Russia because Russia's got no one else to sell them to. So
I think at a discount of 30-40% is what they're saying.
Yeah, exactly. So that's obviously a win for India, and Russia's still getting some money in the door for their most valuable, exported assets. So it already is causing a bifurcation, Bo. I know there was some news that came out about the Russian economy, the ruble, what happened when the sanctions were announced and how it tanked the value of the ruble. But then there was a certain number of measures that the Russian government put into place to try and...
manipulated.
Well, manipulated in one sense, but also... definitely manipulated, yes. But also there's a few things they've done which are bona fide. For example, they're buying gold, and they've capped it at 5,000 rubles an ounce of gold. So if you look at like before the conflict broke out, I think that was paying like about 10% above what the price was in Russian rubles at the time, and now obviously it's not as good, but the ruble's rebounded. So they're doing it in a number of ways, and I just want to shout out to this YouTuber named Perun, Perun, an Aussie YouTuber who does mostly videos about war finance and war economics. So if you want to check him out, he's got some great videos about this, but he's got this in particular one slide in one video where he talks about the step-by-step guide to Russia saving the ruble. And they've done it in 5 steps, which I've just got noted down here. So 1, they're buying it themselves, so buying their own weaker currency with more expensive ones to increase demand for that currency. They're bribing people not to sell it by having initially 20% interest rates in their bank accounts. Now I think it's down to 17% now. They're forcing others to buy it. So as I mentioned before, if you want to buy the Russia hydrocarbons, pay in rubles. They're banning people from selling it, and they're making it hard for people to sell via imports. So that's sort of what they've done. They've artificially propped it up, and they've also done similar things in their stock market. Like they closed the stock market, then they reopened it for only certain stocks, and they've also banned foreigners from selling Russian stocks. So yeah, this is all via. I mean, I've read this stuff before, but if you want to look at Perun's video, and it's called "The Price of War: Can Russia Afford a Long Conflict?" Shout out to Faustus for giving me the link to this. It's a very, very good. It's about an hour long, so it's long, but it's a very good summary of what's going on, and it compares the NATO economies versus the Russian economy, and talks about, can Russia outlast NATO, and that's sort of the crux of it. So, yeah, it's
what was the outcome there, Arnie? Just out of curiosity,
for the whole video.
Yeah, because I don't believe they can.
Well, he
from
gives
what analysis I've read.
Well, he sort of gives his closing thoughts, not an analysis per se. Like, he does go through some analysis, but he's basically saying, essentially, no. Like eventually the West will outlast them, but it also depends on what they do following the war ending. Like if they go in, if they rebuild Russia, if they show everyone that if you attack not a NATO ally, but someone, unnecessarily, we're just going to support them through finance, through anything, through aid, through whatever you need. And then when you're done, we're going to go in and rebuild them better and bigger. That will just show that there's almost like no point to the war in one sense. Obviously, there's a lot of lost lives, and that's horrible. But yeah.
Yeah, I think the key thing as well is to just remember that, for instance, I used to be big on there initially with, India and China buying a lot more of the hydrocarbons, right? Yeah. But then, recently on a bit of analysis, because I spam too much content a day, started going into the limitations of, Russia's only got one freezing LNG port that's not even really up to 100% yet. And so even if they wanted to sell to markets, because their pipelines don't run into India, and there's only and the pipelines that are currently running to Europe don't connect into the pipelines with China. And so even if they want to sell a lot more, they can't. And so with like the G7 and Europe putting a ban into into oil, not into gas, but into oil, the Russian economy can still, even though the ruble has been propped up via these measures, I think it's
they can last a long time. And that video also talks about they build up the war chest, they build up their reserves, but they can't last forever. So
no, I think the other key thing is they also, for some reason, I don't even know this one yet, but they forgot that they borrow the US dollar off the US. They don't own it. Yeah. And I think, having 400 of their 600 billion in foreign reserves frozen, I think that kind of hurt their war chest a little bit. And
did we talk about diversification earlier?
100%.
After this, you're going to advise Putin? I reckon.
No, good question and good answer, Hans. I think, this is going to maybe lead to, the USD. I think we're going to see in the next year or two a secondary kind of base currency for the reserve currency. Not the US dollar's not going away, but there will be probably a second one coming in.
Yeah.
Whether SWIFT stays dominant or there's a secondary one coming in.
Maybe for that bifurcated economy, like SWIFT will still be the Western world's payment mechanism, but maybe I know Russia's been trying to build their own one. But I know
59 countries at the moment have got sanctions of US dollars, so there is a number for you.
Yeah, that's a lot. I got conscious of time, and I've got a great 50-50, watch your choice, gun to your head, whatever you want, boys, because I actually thought about this during the week in honor of Brad being in Chile, in Patagonia. So, and us being Melburnians, this might also be a matter of state pride here. But I was thinking 50-50, what vest do you prefer? A Patagonia vest or a North Face vest? Linking it back to Patagonia in Chile.
I'm going to go a North Face vest.
Because you're a Melbourneite, or why?
Nah, I just think the North Face brand is better than the Patagonia brand. That's about all there is to it. But if I could travel in Nepal versus Patagonia, I'll take Patagonia. There you go.
Okay.
Now, is North Face an Australian brand? Excuse ignorance.
Oh, I don't know.
No. I think it's US. I think it's based on the North Face of Everest or something.
Now, I'm wondering, is the differentiation of brand there?
Should have Kathmandu.
Should have said Kathmandu.
Patagonia is a sustainable brand, isn't it?
Terms
of the clothing. So, I don't know how sustainable North Face is, so I'm going with Patagonia.
You brought ESG into this.
Brought ESG into the decision making. I love it.
There you go. Thinking about the environment, fellas, thinking about my footprint.
Well, you know what? I was going to say North Face until you brought that into it, but I'm still going to go North Face. Like, if I take out the ESG considerations and just think about,
don't worry about the world. Just worry about yourself, mate.
A Melbourne fashion staple. I'll offset it with other means, but a Melbourne fashion staple, I'll go North Face.
It got a bit of publicity the last couple of years in lockdown, didn't it? From one state premier.
Yeah.
He loves his jacket. Yeah.
It's all about North Face and getting on the beers.
Absolutely.
I do love that this is 50-50 today. Great. I thought it was going to be, Luna survives or doesn't.
Very good 50-50. And the reason we do it is because you've got all these different choices in the world, girls and guys, and many different investment choices and lifestyle choices too. So a little bit of lighthearted fun at the end of the pod. So
you know what they say? You know what they say, Johnny? They say vote with your dollars. So your ESG consideration was a very good one.
Yeah, thanks, mate. I appreciate it. So yeah, Patagonia, you got my tick. But no, great chat today. Thanks for tuning in and listening to episode 30. We appreciate your patience whilst we got ourselves together and got back in connect. And we will endeavour and ensure that we lock in our diary for weekly going forwards.
Yeah, Brad cracking the whip. We're doing weekly now.
Yeah, looking forward to bringing you some more content, guys. So,
and you can get us at Money in the Tank, Facebook, Instagram, Twitter, and YouTube. Thanks. Drop a comment. Thanks, guys.
Thanks, guys.